Welcome to Bryson. My name's Conrad. I'm going to share the wonderful benefit of IRS Tax Code 482. I call this the Bryson 1-2 punch. And the reason I call it the 1-2 punch is because without IRS Tax Code 482, it won't be possible to even utilize IRS Tax Code 162, which is the second punch, without this amazing first law or code. So let me get right into it. So you watch me. You might own a business. It could be a rental car business. It could be a restaurant. It could be a grocery store. I don't care how big the company is, how small the company is, does not matter to me at all. What matters is that all businesses have a gross amount and a net. What determines the net are the expenses. What most businesses are doing, especially billionaire companies and really wealthy individuals, is creating other entities. For example, say you're a rental car company. You say you own a rental car company. You have to pay to manage these cars. You have to pay to keep the cars clean. You have to pay for registration, etc. So what some people do essentially is start up an additional LLC or corporation. So say, for example, this is XYZ1 that manages the rental car company. XYZ2 also offers the car washes. So instead of paying an outside source money to keep the cars clean, or monies to deliver it, say if they offer a valet service, instead of paying an outside party, they'll offer their own valet services by setting up another company that offers valet services. They'll pay the company they own, which has a separate EIN, an employer identification number. It has its own identity apart from this company. So you have two companies here, which essentially is a parent company and sister company. And what happens essentially is now you can actually pay your company, and then your company can report it as actual income, but you could utilize IRS Tax Code 162 in an ethical fashion and legal fashion. This is legal. You can actually recoup those deductions and expenses by receiving tax credits, benefits through utilizing Tax Code 482, which allows intercompany transactions. Intercompany transactions allow you to own two entities, regardless who owns it, if it's the same person, and you can actually capitalize off of receiving tax benefits of IRS Tax Code 162 as long as the expenses are ordinary and necessary in the pursuit of income in your industry. So for example, if you're a rental car company, it would not be ordinary and necessary, typically speaking, to purchase a stove or oven. But if you're a restaurant who's purchasing a stove and oven, and you bought it from a manufacturer that you own, for example, that's selling you the stove and oven, you can actually receive it as a tax benefit on your tax and get tax credit for the expenses that you pay yourself essentially, and you keep the money inside. This is how you grow wealth even further. You're not breaking the law. So when you hear these rules about companies paying $0 taxes, oftentimes not that they're avoiding paying taxes, they're finding ways to construct in such a way where they utilize the rules at hand to be able to dance around the law and be able to legally document that this is proper transactions between two companies and bring the income down to zero. This is how you do it, to bring it down to zero or bring it down so significantly, because now instead of just paying outside sources, you're paying yourself, you're keeping the money inside, and these are two different entities, and you could do this. Where this does not work is if, for example, you are a sole proprietor and you attempt to open a DBA, say it's Conrad 123, the person, and then Conrad opens 123 DBA, doing business as, and you try to charge yourself and sell it to yourself. It doesn't work in that fashion. It has to be two separate trade entities with two separate EIN numbers or Social Security numbers for this to work. Only way, and it has to be reasonable. And the way you know if it's reasonable, for example, in the example of a car rental company, in any company, this is the same framework of thinking you want to utilize, is you must do quotes. And what I mean by quotes is go on Google right now, or whenever you have a chance, whatever industry you're in. I don't care if you sell knives. I don't care if you sell guns. I don't care if you sell rugs. I don't care if you are an investment firm. Whatever your expenses are, you go online and figure out what is the reasonable price, and your similar an ordinary industry charges. Get at minimum 5 of these, I would say, as many as possible, but 5 at minimum. That way you document that you did your due diligence and you figured out what the standard reasonable price is in your industry, whatever that might be. And their example of rental car companies, say the rental car company owns a car wash company, that's the second entity. They'll go online, look for 5 different car wash companies, and essentially from those 5 wash, they'll average out the prices and charge that amount. So if you do get audited and everything, what happens is you've done your research. You can show the IRS, no, this is reasonable within my industry. It's ordinary and necessary in the pursuit of income in my jurisdiction. And that's how you get proof that you deserve this. You need documentation. So if you're ever audited, even if it's rare to be audited, typically, if you are audited, you have proof. To make this work, you must document everything. It must be reasonable, must be ordinary and necessary. And for example, I live in California, Los Angeles specifically. The price here, typically say for a car wash, might be $200. But if I go to Wisconsin or Ohio, it might be $35 to $50. If I'm in Ohio, Wisconsin, I would not charge $200, for example, for a car wash. But if I'm in LA or California or Orange County, I can. Orange County is even a little bit higher. I can, because it's ordinary and necessary in that jurisdiction for what's going on. And that's where the 5 quotes come in. You can do this not just for car wash companies, not just for rental car companies, not just for investment firms, not just for restaurants, whatever you're going to be, wherever your expenditures are, wherever expenses are, you figure out what the price is, the normal price with at least 5 quotes. If it's buying an oven for your restaurant, if it's buying utensils for your restaurant, if it's buying software for your company that maybe builds computers, whatever the case is, whatever the actual price is, no matter how much it is or how much it isn't, you get at least 5 quotes and you average it out, and that's the price you charge your own company you own. That's you essentially become the parent company, and you're basically have an intercompany transaction, which is utilized and ethically fashionable for IRS Tax Code 482. That's how you do it. I have this whiteboard here. I'm going to take a picture of it, put it at the end of this video. If you want to scrutinize it, if you want to look at it, if you want to add some additional ideas. But this is a great way that you can really grow your wealth, is understanding IRS Tax Code 482. And remember, I know we're in the month of January, and today is actually January 5th, 2026. Sorry, it's January 5th, 2026. But this is the thing though. You need to start planning your taxes now and throughout the whole year. You don't just start planning your taxes at the end of the year when it's tax time or when April comes around. You need to be planning this at least once every quarter, what your strategy is going to be. That's what being a tax strategist is, as opposed to a CPA. I am not a tax strategist. I'm not a CPA. I'm just sharing what that is. You need to strategize through the year, people. Don't just take my word for it. I'm human. I make mistakes, but I'm sharing strategies I've shared with my clients, and that will definitely help you and anyone else. Doesn't matter what business you are in. If you have expenses, what businesses typically have expenses, that's what kind of deems you as an actual business and not a nonprofit, especially when you're business for profit. You want to make sure to utilize tax code 482. You just need to make sure that you document everything, make sure it's reasonable, make sure it's fair market value, and make sure it's real and documented. Very important, document everything. And that's the 1-2 punch, the Pearson Bryson 1-2 punch, like a boxing match. Without IRS 482, you won't be able to benefit IRS tax code 162 if it's an intercompany transaction where you own both companies. Easy to document if you're paying another company, but why not own the company yourself on some of the expenses you pay for anyway if you just pay yourself and if you're able to offer the service. So like I said, the example could go for any business. If you can set this up, just an additional strategy. A lot of businesses are already utilizing this. For example, if you're a car rental company, if you're going to pay to get your cars washed anyways, why not wash your cars yourself and earn more that way with tax benefits and strategies? Anyways, like, subscribe, share. Welcome to the channel, and let's keep growing our mind. Ciao.